Okay, it's 4:30 on my clock, so we'll go ahead and get started. We're very aware of how busy you are and that many of you are still at school. So this is the very first Stable Steps. This is to bring awareness regarding Stable Kentucky account, financial literacy education, and the opportunities with our Bank On network. So we're doing this as a collaborative effort. We have the Kentucky State Treasury, we have Kentucky Financial Empowerment Commission, UK Human Development Institute, and our Stable Kentucky ambassadors who come from us throughout the state. So I have a couple of quick housekeeping items. If you'll mute yourself, that will just help us to breeze through the information in a timely manner. You are welcome to post questions all throughout this presentation. Go ahead and post those in the chat and we'll address all of those questions during our Q&A at the end. We'll try to keep this to 30 minutes with the last half of the session. After the 30-minute presentation, we'll stay on for up to another 30 minutes to give you an opportunity for questions and answers. If you would like to have this presentation with closed or captions or live captioning, if you look across the top of your Teams, you'll see more. Click on the more and it'll give you a drop down. Look for language and speech. Another drop down will take you to show live captions. When you click on that, captions will come up across the bottom of your screen. So I want to tell you just briefly who we are and why we wanted to do this. We're the Kentucky Financial Empowerment Commission. We work out of the state treasury as a commission of the state, but we are a nonprofit. So we're not state employees. We're a nonprofit that serves the communities throughout the state, working specifically with 6 pillars of focus. Everything we do is surrounded by financial literacy education. Our 6 pillars include Kentuckians with disabilities, aging Kentuckians, low-income families, veterans and military personnel, Commonwealth employees, and K-12 students and teachers. So hopefully those 6 pillars are who you are representing as you're on the call today. Many of our pillars cross paths with one another, so we don't isolate them. We're hoping that we have lots of them covered in today's topics. Very quickly, I'm Jennifer Inman. I'm the Executive Director of the Kentucky Financial Empowerment Commission. I have with me today Richard Bryant, who's our Program Director. He's also our Bank On Fellow. From the State Treasury, we're honored to have Dylan Diario, who serves as the Unclaimed Property Director, and Jordan Pennington, the Deputy Communications Director. Then we also are very delighted to have Carolyn Wheeler from the UK Human Development Institute and Karen Herdina. Both ladies are not only Stable Kentucky ambassadors, but they have lived experiences. They know firsthand the benefits of the information that we'll be sharing with you, and I'm very excited to hear all of the valuable information and resources that they'll be sharing. So why? What are we going to get out of this today? The benefits of attending are threefold. We hope that this becomes a virtual networking for you, that you're able to connect with other people who serve in the same capacity or have similar situations that you have in. We also hope that this builds financial security, not only for those that you work with, not only for Kentuckians with disabilities, but for you as well. Then thirdly, we hope that this brings you resources that you're able to take immediately and start using. So today, our topic is the importance of being banked. Every time we have these meetings, we'll be talking about Stable Kentucky, and we'll be adding in an element of financial literacy education. So our agenda for today starts with the importance of being banked and our Bank On program, an overview of Stable Kentucky and the Stable card, and then we'll end with a question and answer. So with that, I'm going to turn it over to Richard.
Thank you, Jennifer. As Jennifer said, my name is Richard Bryant. I'm the Program Director for the Kentucky Financial Empowerment Commission, and I have the pleasure of being the Bank On Fellows for the Kentucky Bank On Network. And so the Kentucky Bank On Network is an initiative through the KFEC and it provides financial literacy education and helps create events and programs within your communities to promote financial empowerment and increase access to certified bank on accounts. And so the real goal of the Bank On network is to ensure that everyone has access to safe and affordable banking services. Next slide, please. So why is this important? So research from the FDIC shows that there are many reasons consumers lack a basic transaction account. Not enough money for the minimum balance, distrust of financial institutions, high or unpredictable fees. They don't have the correct identification to open a bank account. They may have a negative credit or banking history. And thanks to ChexSystems, which is a system where all the banks go to see if this person should get different types of accounts or different types of loans, they will see throughout the system if they've had a bad experience at one financial institution where they had negative marks on their banking statements, those will be in those ChexSystems. And so they will be able to see it throughout the banking industry. So many Americans are driven to use expensive alternative financial services. And these include check cashers, payday lenders, pawn shops that charge high fees for financial services that fail to help people get ahead. A lot of these things, especially with these check cashing places, they will keep you in debt because of the high interest rates. And if you miss a payment, then they are adding even more charges onto that product. And so that's something that the Bank On network is really trying to work with. So with the Bank On standards, you see consumers should have access to mainstream banking accounts. So what these are, second chance accounts, ways for people who have essentially been kicked out of the financial system to be brought back in and be able to start building their financial stability and credit over time. Financial institutions should provide accounts that meet the Bank On national account standards. And so I'll show you a page of the Bank On standards, but a lot of the big things are no overdraft. So if you don't have the money in your account, you cannot use that card for that. You also have robust debit card and online bill pay functionality. So you'll be able to use online banking and keep track of your finances in real time. And also, financial institutions and policymakers should minimize barriers to banking access. We do a lot of work with the refugee communities and trying to help them get into the American banking system. We also do a lot of work with people that are incarcerated, and they are trying to get back into the banking system. So the Kentucky Bank On network helps to connect banks and these individuals that need new accounts that are Kentucky Bank On standard accounts together. Next slide, please. And so I've gone over most of the Bank On standards for the accounts, but like I said, it's no overdraft, no or minimum fees. And this is a way for people to get back into the banking system. And it's so important. I was just teaching a class a couple of weeks ago. We were talking about buying a car. And a lot of people don't understand that most of the times when you're buying them from a dealership, that dealership is adding on more fees. They are putting on higher percentage onto your APR. Whereas if you had a financial institution, you could have gotten the auto loan from them and avoided a middleman that's going to add into the cost of buying a car. Next slide, please. And so here's a list of current certified Bank On accounts in Kentucky. And we are attempting to grow the list every year. I'm working on building up the Kentucky Bank On Network Coalition. So if you know anyone interested, please send them my way. And our goal is to connect financial institutions with the people who are unbanked and need to get into these financial systems. So thank you very much. I'm going to pass it back over to Jennifer.
Thank you, Richard. Thank you for sharing about the opportunities with Bank On. It really is a way for people to either have a second chance at being banked or in many cases a first chance. We talked with a group today about the homeless population and how one of the many barriers that they have is the fact that they don't have identification. You may see that in your classroom with students where families come from other areas, or maybe they just don't have a permanent location yet, so they don't have a piece of mail that shows their address. And that's a barrier to having a bank account. But what our objective is to make sure that people aren't separated from their money. We want as much as possible to stay in their pocket, not go to pay service fees and check cashing fees, those types of things. So we're not pushing an account or soliciting for a bank. We're really just trying to give them access to safe and affordable banking. Thank you so much, Richard. Now we'll turn it over to Carolyn.
Well, thank you, Jennifer and Richard, and good afternoon, everyone. So my name is Carolyn Wheeler, and I'm fortunate to know some of you who have joined the webinar this afternoon. So appreciate your time, and I'm really glad that you're here, that all of you all are here taking some time out of this beautiful afternoon, at least it is here in Lexington. So I am employed at the Human Development Institute, and like my friend and colleague, Karen Herdina, was involved in getting Kentucky's ABLE program started back in the day. Let's see, 2016, I'm thinking, Karen, is when it actually opened. So I think we were having meetings probably back in 2015. And so I'm really just excited for the fact that we have a viable, very viable ABLE program here in Kentucky, and hope that you will share information about this with all the people that you come into contact with. So ABLE stands for the Achieving a Better Life Experience Act of 2014. That created savings and investment accounts for individuals with disabilities. So this was a federal piece of legislation that then President Barack Obama signed into office in December of 2014. And so what ABLE, and by the way, I should say, I think it was at least 10 years of advocacy on the part of primarily families who had children with disabilities, who wanted to have a way to save for their future that didn't compromise their eligibility for benefits. So just we are standing on the shoulders of some phenomenal advocates who helped make this happen. And so funds in an ABLE account do not jeopardize a person's eligible for means-tested benefits, which in particular are Supplemental Security Income, SSI, and Medicaid. I do want to be very clear that a person does not have to be receiving SSI or Social Security Disability Insurance to have an ABLE account, but it does protect, again, people's eligibility for those benefits either now or in the future. Next slide, please. So the benefits of Stable accounts. So Stable is Kentucky's ABLE program. And contrary to what you might think, yes, we do live in Kentucky, and that's why you might think it's called Stable. It's called Stable. The ST stands for State Treasurer, because as Jennifer said, our ABLE program is housed in the Treasurer's office here in Kentucky. So the benefits are that the account is actually owned by the person living with the disability. Now, I'll come to it can be set up by someone else, but it's actually owned by that person. It can eliminate that, terror at the end of the month, particularly on behalf sometimes of family members or people who live in homes, run by organizations that provide services. Oh my gosh, we need to spend down. We're going to be over that $2,000 limit. It really provides a way to do short-term and long-term savings. And the tax benefits would be to people who may want to gift money to the account. So next slide, please. So what can you spend the money on? I thought I'd come to this and then talk about how one could open an account and some of the ins and outs of that. So Stable or ABLE accounts are essentially 529A accounts. If you're familiar with 529 plans, those are plans that were created where the IRS allows for the money to grow tax-free as long as it's used for qualified educational expenses. The ABLE program, or the ABLE legislation, created a 529A account where the IRS has said, yes, you may save money tax-free. If you didn't hear that, I'm going to say it again, tax-free, because these really are investment accounts. So it allows for opportunities for your money essentially to grow for free as long as the withdrawals are used on qualified disability expenses. So that definition includes it needs to be related to the disability help maintain or improve health, independence, or quality of life. Now, housing and rent, basic living expenses really are, expenses that people without disabilities would also have, but it does allow, again, for those expenses to be paid for out of an ABLE account, as well as transportation, education, assistive technology, financial management, health and wellness, legal fees. Now, this is not an exhaustive list of the categories, but it gives you some idea of the many areas in which stable funds from a stable account could be used for. So next slide, please. So in 2025, a maximum amount of money that could be contributed to one's ABLE account anywhere in the US is $19,000 per year. Now, that money could be contributed by the person themselves, particularly if they have a job. It also could be contributed by family members. And there should be an ETC there. I'm sorry. I see my own typo. But in any event, that is one of the beauties of a stable account, in my opinion, is that, again, the person can have one account, but multiple people could contribute to it. So there's actually a way in which you could send out an email. Like, say the person's going to be graduating from high school. And so often high school graduates get money. Well, people could gift directly into a person's stable account if they have one. So that to me is one of the just really many, many benefits of having a stable account. Next slide, please. If someone is employed and they do not have an employer-sponsored retirement account, they could contribute an additional $15,060 of income. So it has to be income. It can't be that other people could contribute that additional money. It has to actually come from, that person can't contribute more than they make, but that would allow for a little over $34,000 a year. And so I think we can all think about that could be some real money, especially if it's over time and it grows tax-free, that could really create some meaningful opportunities and outcomes for people. Next slide, please. So the way that you fund an account, so back to Richard's presentation, this is all the more reason why people need to be banked, because you would want to link their bank account with their stable account so that you could make automatic contributions. And then also when you want the money out, I'm going in and out, you've linked it to a bank account. So again, that can happen. Now, Stable Kentucky can mail checks to people, but I think we all know about the egregiousness of sometimes all of those things can get stolen or they just don't show up. So really the best way for this to work is that, again, it's linked to a bank account. Now, to open the account, again, that could happen through an electric funds transfer. It could also happen by mailing in a check, or you could create a direct deposit. For those of you I know out there who are employment specialists, no. If you have the person's paycheck, yes, you could have the person's paycheck directly deposited into their stable account, but Social Security will still count that as income. It's not an income shield. But if that's what the person would like to do as a way to save for a future goal, that would be fine. Okay, next slide, please. I really want to help people understand that that this is not just a checking or savings account, that there really is the opportunity for investments from, again, these mutual fund accounts from Vanguard, in order to really have an opportunity for their money to grow. Now, I realize, depending on if you keep up at all with the market, we know we've had some down days, but we'll probably also have some up days. The market goes down, the market goes up, but over time, it has the highest yield. And what the stable provides there is a bank safe option, which is like a money market account. And then you can see a little bit more, risk, and then through conservative. So the growth option would obviously have the most risk in terms of having most of the money that would be in equities or stocks, but there's also the greatest opportunity there for gain. So the person themselves, whoever opens the account, has to make a decision on where the money's going to go. And when I come to the website, there will be more information there about each of these accounts. So next slide, please. There are costs, but they're very, very minimal. Next slide, please. And that amount would just come directly out of the account. And so it costs $25 to open an account. And I'm going to go to the website after Karen talks about the prepaid card next, because that's where you open an account. You open an account so the person themselves with a disability can open the account, or an authorized legal representative, which includes people who have some relationship with the person or who have some legal role in their life. So next slide, please. So Karen, if you'd share about the Stable Visa card.
Hi, everybody. Yeah, a couple things I want to tell you. The 3 things you should remember about the Stable card is it's easy to use, it's very safe, and it's a great teaching tool since all of you here, a lot of you here are teachers or working with students. It's very easy. It's a different website. You do have to apply for the card separately, but it's very easy to access and to download information or to move money from your Stable account down to the card. It's very, very safe. As you can see up here, you can't have an overdraft. If you don't have the money, it won't spend it. They can't get cash out of it. Okay. Since it's a downloadable card, that means that if the card were to get lost and somebody was to get the PIN, they could only get whatever's on the card. It's not like some debit cards, which are connected directly to your account. It's not like that. It also can give you alerts and notifications about, if something was tried to be spent on something it shouldn't have been, or if the balance is getting low. And that's all things that you can set up in the website. Now, why it's a really good teaching tool. If there's anybody who's trying to learn how to manage their money, as Carolyn said, an ALR can open the account, so they would have a card, but then the individual can have the card. Or if the individual opens their own account, they can have their own card. But then if it's a case where the ALR is involved, they're able to set parameters, like where can they use this? You can go in and set that, you're not allowed to use it at liquor stores. You're not allowed to use it at bars, things like that. And also you can set it up so that on a regular basis, if let's say we're putting together, okay, we're going to budget your money. And so we're going to give you, let's say $100 a month. Okay. And you could set it up so it automatically would put that money over. You could also set it up so if the balance gets below a certain amount, it'll automatically update the card. And then you're able to also track the expenses. There are tools in there. You can upload receipts to each of the items that are in there because it keeps track of everything. And there are spreadsheets, so you could download that and sit with the individual and say, look how we're spending our money. So it's a really good tool. I've been using it for both of my boys, and it's been very, very helpful in managing their money.
I'm muted. There I am. Thanks, Karen. So here is the Stable Kentucky website. I imagine Jennifer has put that in the chat box. If not, I can. So it's just stablekentucky.com. So as the box says right here, open an account. So this is where you would go to open an account. And then I'm assuming that you all either work with or you have children who are eligible, but the eligibility criteria is any resident of Kentucky who developed a qualifying disability before the age of 26 is eligible to open an account. So if you want to learn more about that to see if you're eligible, certainly anyone who does receive an SSI or SSDI payment is eligible. But there is a way to just self-certify, and you don't have to actually provide documentation when the account is open. And again, the account itself is managed online. So again, it's how you get money in, again, through linking a bank account. And it's also how you request money to be put back into your account. So when you do make requests for distributions, Stable Kentucky Vanguard, who is actually the financial services company where the money is invested, doesn't ask you what you're using it for. So you can click here, and I would just agree, use your account wisely. Most expenses are considered a qualified expense. You're going to have a large number of categories. As Karen said, the Stable card can help keep track of the expenses, or you just have to keep receipts. I don't have a stable card for my friend Linda, for whom I have an account, but I do keep receipts in case I ever was audited by the IRS. And I would be able to provide proof of how I spent the money. And then someone asked the question about what if I buy something that doesn't qualify? Actually, you'll have to pay tax on investment growth plus a 10% penalty on earnings for non-qualified items. They are also considered income for the month, and that could count against your eligibility for supplemental security, income benefits, or Medicaid. Karen and I have both have experience. I'm calling this 800 number. You will eventually talk to a real person. So just know that that's the case. There'll be a few voice prompts, but there is actually a person that you would be able to ask your questions to. And then there are additional resources here at the bottom of the page. So the other thing I would encourage you to do, this is just learning more about what is stable. Trying to find the page where I can click on the investment options. Here we go. Is that you really read through the website to understand what these options are. Because again, when you open an account, you will need to select where that money's going. And as I did, I also then have a ongoing deposit. So Jennifer, we'll turn it back to you.
Thank you all so very much. Great information. We have talked to people throughout the state who have used this as a way to establish wealth, so that as their person with disabilities continues to age and their needs increase, there's a way to pay for those needs down the road. So although there are limits to the amount you can put in each year, it does give individuals the ability to earn a little more money than they would without the account, because they have a place to put that money and be able to set it aside for use later. And then others use it on an ongoing basis. So it's a great tool. There's a lot more information than we could even begin to cover in 30 minutes. But I hope that today's session has been useful. You did complete the importance of being banked. Next month, we'll be talking about optimizing financial opportunities with the stable account. So we'll be diving much deeper. Today was very surface level. We will ask if you would please fill out our survey. This is really to guide our discussions as we go forward. As you can see, we identified 3 topics that we wanted to be sure to cover, but in May, we're really being guided by the comments that you give us, the information and feedback that you give us. So if you'll take a couple of seconds to do that, we would ask that you please just use the QR code, and it's very brief. It'll take you a few seconds on your phone if you're willing to do that. And then we'll move right into, I won't switch slides yet, but we'll move right into the question and answer. So you are welcome to turn your microphone on and ask. You're welcome to raise your hand to ask, or you can type it in the chat if you have specific questions for any of us.
I can't believe we did that good of a job. So I would hope there'd be some questions. I don't know. Again, I'm assuming you all are, well, if you don't have any, that's great. But if you do, we would really welcome them. Whatever you're thinking about, probably somebody else is.
I'm sorry, Carolyn, I didn't mean to interrupt. Or if you have a lived experience that you would like to share, we would definitely welcome that as well.
Well, I'll just ask all of my colleagues who work with, and all of you who work with children and young adults, please, please, please do your best to make sure their parents know about this. It's really been the hardest thing, I think, for many of us. We've tried really hard, Karen, haven't we? But to get to families, and it's particularly families who have the Michelle P. waiver, of which there are 10,500. So all 10,500 at least meet the eligibility criteria. Now, whether or not their families, have the ability to save, but I'm going to assume many do. So we just would really appreciate your help in getting the word out. Jennifer, I'm going to share my screen again since nobody's talking. I'm going to come down here. I'm pretty sure if I go to resources, program information, much about opening an account.
And we're
Well,
still seeing my screen.
You're right. Thank you. I'm looking. Well, I'm not finding it any way to share. I'm pretty sure on the website, though, there is a flyer about able accounts that you could share with people.
And they may be updating that since some of the limits increased and some of the age requirements changed. So it's possible that they've pulled it in order to update all of those.
But yeah, the age
Mhm.
requirement will change to 46 as of January 1st of next year. So people's qualifying disability has to occur before the age of 46, starting in a year. But the contributions amount have gone up every year since accounts, able accounts started. It's the gift tax exclusion for those of you who may know what that is. So if it increases, then this amount increases. So Zach is typing something. I'll also just put my email in here because if you email me, I have that. I have a flyer that I can send you that you could print out and send to people.
And if you know someone who wasn't able to attend but would like to have the information that we've presented, we are recording these and we'll be publishing them on the website. We'll also put them out on social media, so look for those. Feel free to share the information about the upcoming ones with all of your friends and family. We would love to have anyone come and join us to learn more about the stable account. Let's see. Which website?
Oh, stable HDI. No, Mita. So I just have a flyer that I could send you, but the website for Stable Kentucky, let me just put that back in the chat box. Because you can also just send people the link.
I just put our website up because we will post the information there as well, along with information about today's session. And then I added the stable to that also. And Carolyn did at the same time. So you have it twice.
Thanks for asking, Nita. I feel really confident telling, this would be a pre-employment transition activity, services activity about self-determination, about advocacy. You could be billing, voc rehab. I mean, that's not the only reason to do it, but that helping students themselves to understand about it, even if they're not capable themselves of opening it, but you could be, I think, having great conversations about, yeah, for sure, it's a pre-ets activity to help them to understand, and even also about helping them to understand about getting a bank account. Yeah. Yes, Billy.
I have a question as a new employment specialist. What are some of the misconceptions we might hear when we introduce this to a family? Are there common, oh, I've heard this or I've heard that, and you have to kind of correct them, or just the basic, what would be the most common question I might have about it that we really need to be prepared for? That's a
Billy,
very broad question, but
Billy, I think it's more likely you're going to hear, I've never heard of it. That's what I think. That's my guess. What do you think, Karen?
You'll also find some lawyers who, if they have a special needs trust, they'll say, oh, you don't need a stable account. You have a special needs trust. And that's not so. Yes, they have a special needs trust where you could move money from the special needs trust into the stable, plus they have the card, and so they can work in concert with each other. Another thing people get nervous about, I've had families, they're very nervous about, oh, the investment options. What if we lose all the money? And, so then I've recommended to people, as Carolyn did, read the information, but if you don't understand it, go to a financial advisor to help you, Because there's plenty of people out there that would help you just to go through it and probably not charge you for it.
Okay.
And the only other thing you might hear, Billy, actually, and Karen was very instrumental in helping this to get better, is that there is many accounts initially all ABLE accounts were subject to Medicaid estate recovery upon the death of the account of the beneficiary, of the person with a disability. So that was a concern, understandably. But Karen was instrumental. If you want to talk about that, Karen, you helped get a bill passed.
Yeah, so in 2023, we got a bill passed that Medicaid, the recovery, when a person passes away, they can only, they have to follow the federal guidelines. They can't just say, oh, we gave you all this money from the state Medicaid, and so you have to give it back. So they have to follow the federal guidelines, which currently are if you'd gotten in-home nursing care, been in a nursing home, there's a couple of things.
Well, you're over age 55.
And you have to be over 55.
Over 55.
Right, you have to be over 55. So, yeah, so we got that passed 2023.
I'm going to share one other good website, a really good website, Billy. Okay. Again, we're on Teams. I have to talk myself through this. Aha. So the National ABLE Resource Center, ABLE National Resource Center is a really great resource. If you ever want to brain break yourself just to learn more about ABLE accounts, so debunking some of the myths, there's a section right there, frequently asked questions, and there are lots of, this is really, I don't know, Jennifer, if we'd ever want to, it's a roadmap to independence. Maybe link this to our website, but these are really good. Again, I'm talking to my pre-ETS friends about, how to do this and then building a circle of support. So I would just recommend that website as well for you all to learn more about. They do have webinars. There's a really good webinar on that website about qualified disability expenses. So, and you can also be on their email list.
Okay.
Thanks for asking, Billy. That's a good
Thank you.
question. I would just say, as a person who supports someone with lived experience, who's fortunate to have one of our Medicaid waivers, I don't know what I'd do without it. I mean, because she worked, she has a very substantial Social Security retirement benefit off of her own work record. And she's a woman who doesn't want purses, shoes, clothes, has no children, no pets, doesn't own her own home or a car. I mean, so doesn't wear makeup. I mean, so I just can't spend all of her money every month. I'm trying. She went on 3 or 4 vacations last year. But anyway, all that to say is it's just to keep her under that $2,000 resource limit, to keep this phenomenal Medicaid waiver that she has. I mean, you just only need one big screen TV. I mean, so anyway, it's just really incredible. I'm a fan.
To add to that, we have several families that we've worked with who they were relieved to learn of this because they have children who have entrepreneurial spirit and they want to have their own businesses, but it brings in too much money. Or they want to have a job that's more meaningful, but that would also bring in too much money. So this is a way for them to put it into a stable account, be able to set it aside. In those situations, they really are setting it aside. They're not spending their money each month, but it protects them from losing those SSI benefits and allows them to have a more fulfilling work life and bring in more money.
Yes. And you all, those of you that I know how much I want to help people understand that when they go to work, that they don't lose everything. It's the much better problem. People say I have too much money. And I'm like, that's an opportunity. That's not when is having too much money? I mean, shouldn't be a bad thing to have too much money.
And it shouldn't create fear. So this is definitely a way to alleviate some of that stress. All right. Well, we have a very quiet bunch today.
We do.
Oh,
I see somebody typing.
Yeah, I think somebody else has got a question.
And I would agree with Karen. People don't know about this. That's going to be what you hear most often in our experience anyway, is that they just had no idea it existed. That's why we're trying to spread the word.
I'm not sure what you mean. What's more than the allowed amount? For what?
Okay, can you hear me?
I can, Mike. Yeah, go ahead.
Okay. Yeah, I don't know if there's an amount of money that you're allowed to make before you can. Well, for a lot of different benefits, there's a maximum amount of money. So I guess even if your W-2 shows you make more than, say, benefit for Medicaid, for instance. So let's say you make too much for normal Medicaid. If the money you make is put in an ABLE account, even though your W-2 shows that you have more, made more than that, is that a way to save that money and have it used for the necessary expenses and
So,
still get Medicaid?
so again, there's a difference. So Mike, with any of those programs, there's an income and a resource, income resources. So stable accounts help people to have a way to put in excess resources, not excess income. So that more than that allowed amount would depend on what kind of Medicaid. And if it's for the kind of Medicaid that gives you access to waiver services, it depends on which waiver. So is that maybe what, so for example, Mike, I mean, are you familiar with the Michelle P waiver, for example?
No.
Okay. Well, I would just say if the kind of, so then maybe you don't know about that kind of Medicaid. That's the kind of Medicaid that many of us are concerned, many people are concerned about because you want to continue to get those waiver services. Affordable Care Act Medicaid has a pretty good size earnings. You can make, I'd have to go online to find out how much it is, but I guess the answer to your question is no. You can never, excess, you put money into a stable account that doesn't reduce what any means tested program is going to count in terms of your income. Does that help, Mike? That's income.
Yeah, I think so.
I mean, you can't, in other words, putting it into an ABLE account any more than my putting, my maximum amount I can put into my Roth IRA doesn't mean that I'm not still taxed on it. It isn't a way to shield it. So
No.
yeah, it's not taxed. Yeah, it's not shieldable. It's a good question. It's a good question. A really helpful organization around that for people who don't have waiver services. There's something called the State Health and SHIP. I'll get the website here in a minute, but can help people understand some of those things if they're concerned about their earnings. Because certainly if you do have Medicaid for health insurance, that's because you don't have health insurance through your employer, that's a really important thing you'd want to maintain. So I'll see if I can find that. Well, this is a dedicated group to just hang out here with us.
I will mention again, if you will please fill out the feedback, we would very much appreciate that. That will help guide our future conversations. We thank you for joining us this evening, for taking time out of your busy day. Thank you to the presenters. and for sharing all of the valuable information that you shared. If you have additional questions, don't hesitate to reach out to us on a personal level.